Ladies and gentlemen, buckle up for a powerhouse in the world of business and tax. The dynamic business owner and entrepreneur behind Azov Accountants. You can find him strutting around the Norwich Football Club like he owns the place, dabbing NFTs against all Siam's warnings. But today, he's not chasing football dreams or NFT adventures. Steve is here to demystify crypto tax myths, ensuring you don't land behind bars. Brace yourself for the best in the business, the maestro of crypto tax accounting, Steve Collins.
Am I there? Can you hear me okay? Is that kicked in? Yep, good. Cool, so just before I get into anything else with the normal accountancy side of things, none of this is financial advice. I've bumped into a couple of accountants whilst we've been here, so I am going to be simplifying stuff for those that are going to be testing me and trying to check what we are. So please don't take financial advice from a bald, fat, white, middle-aged guy on a stage. Please just, the next few slides are there really to kind of just look to challenge your perceptions, challenge your assumptions, and get you thinking about the tax side, which can be quite a dry subject for people, but is always there in the back of people's minds. So I saw that we've got quite a few new people here. So who am I? I'm an accountant. I'm an ACCA qualified accountant by trade, but also a small business owner. We've got a accountancy practice, but also a raft of small businesses, and also a crypto investor. So I've been relatively new into this. I joined in October 2021, I think, so not that long ago, but in true fashion, gone full degen into a lot of stuff, even stuff that Siam dares not touch at most of the time. So I can give a decent kind of opinion and structure on bits that relate to crypto, and also how that works into the business world, which is where I spend a lot of my time. In our accountancy practice, we've got sort of 350 clients, and I see from a wide range of sort of multi-million pound companies all the way down to pig farmers, sole traders. And so basically, a whole raft of where the industry is going and also where the sentiment is for the market, both in crypto and in the business space at the moment. So Siam came up with the idea of coming up and talking about demystifying crypto tax so you don't all go to jail. Now, it's not going to be that extreme, but there are some very big pitfalls which people can get caught out on tax. And it's about trying to understand where that is now. So twice now, I've stood up here and talked through crypto, and really kind of what I want to do is go over some of those punch points again. Because even 2 years into this and standing up here and bleating it to people and talking about crypto and tax and how you need to look at your own structures, I still hear the same common excuses. Even 2 years afterwards, people kind of, I think when I stood up here the first time, I gave quite a few people in the room some sleepless nights about the tax because the assumptions they had were so wrong. I know some people in here I've had consultations and chats with offline from that because it gave us those sleepless nights. But I don't think it's got to the wider group still. It's still something which I think people bury their heads in, and I still hear, even 2 years later, really, really basic errors in terms of tax, which are going to bite people. It's not going to be as extreme as going to jail, but it will be something which could become a problem at either extreme. I stand up here quite a lot, and you see a lot of the videos of me doing this because I say you've got to look at both extremes. What if it goes to zero? What if it makes you millions? Because they're the assumptions you've got to make. Crypto could do both. Don't wait until it does one or the other before you actually start looking at what you're doing. So we're going to whiz through, and I think what we'll do is we'll whiz through some of the tax bits and pieces. We'll look at mistakes, personal tax, some of the stuff that I hear coming up. And I want to give a general overview very quickly of the crypto world as I see it, and also the business world as I see it. I'm seeing a lot of companies coming through. I'm seeing a lot of people coming through, and how that reacts and how that works for them. I kind of want to give you guys an input as to what I'm seeing in terms of market sentiment in crypto and out of crypto at the moment. And then what we'll do is we will probably, depending on time, open up for some question and answers. And that's the bit where I really want you to be thinking about any questions which are coming up at the moment that you'd like to run through. There's two caveats to that. One, don't be that guy. We're just up towards lunchtime. I'm conscious that we don't need questions that are very specific to your area where everyone's thinking, come on, please, let's not talk about that. So if you're going to have got some questions, please try and keep them general, try and keep them specific to stuff which the wider room would like to understand. I don't want to be giving detailed financial advice. out on stage. We can do that later on, and the closer we get to midnight and the more drinks I've had, the more wild the tax advice will get. So, and we will be here. And also, just for all, Ed, my managing director, is here, so if you can't catch me whilst we're out and about this afternoon, we're here into the evening. Come and catch us, ask us any questions, pepper our brains. None of it's financial advice. We won't stand by it tomorrow when we're sobered up, but come and see us nonetheless. So, firstly, I have a good excuse. This is the bit which absolutely drives me nuts at the moment. So all of the time, excuse after excuse after excuse. I have new people come across, or even existing clients, and I still hear the same things over and over again. I haven't taken anything out yet, is the one that everyone says about. I haven't taken any crypto out yet. I don't have to pay any tax. Don't have to declare it. HMRC don't know about it because it's not happened yet. Not correct. The HMRC knows what's going on. You've got to remember, we champion crypto for its transparency. Everything's on the blockchain. Everything's available to be seen. Everything can be understood and digested and analysed. Now, whether the HMRC or anyone's got the capacity to do that, that blessing for us in terms of security and transparency is the curse in terms of they know exactly what we're doing. And so the fact that you haven't taken anything out yet doesn't mean you shouldn't be declaring it on your tax return. And we'll come back in a little while as to, I've only made a loss. Because, again, you need to be capturing all of this. If you make a loss, what can you do with that? What should you be doing with it? Why should you be including it on your tax return now? Because you need to make sure that you can capture it in the future. So the excuse of I haven't taken anything out yet is the number one excuse I hear, and it is completely irrelevant for what the HMRC and the tax or anyone's looking at. There aren't any rules for crypto yet. Obviously, the FCA is bringing in rules recently in terms of how it operates from a securities point of view. The Howey test, which is the test for securities in the United States, is one that they're trying to push everything through and understand from there. But from the UK, from a tax point of view, there is a very specific set of crypto tax regulations. It's very clear, it's very onerous, and out of the several hundred clients we've got, I think there's 2 or 3 that I'd probably say are fully compliant in working towards that, because it's so difficult to do all of the logging and all of the data tracking. However, saying that there aren't any rules is completely wrong. So it's about taking those rules, understanding them within what you can and can't do, and applying them to your tax-specific rationale. HMRC don't know where it's gone, which is also a very common one, which I hear in line with I've used a burner coin, which again, you're then moving further into tax avoidance. You're specifically trying to move it away from, evasion. Avoidance is okay, evasion's not. So you're moving further into tax evasion. If you go, no, I'm using burner coins. I've said before, if I was the HMRC are self-funded. So they have to find money from tax investigations, from yourselves to be able to carry on going. They're not funded anymore. So they actually have to find errors. So if I was them, I'd be starting at a burner coin and working my way back. We can trace everything. Let's look at what's gone through a burner coin. Let's work our way all the way back. Steve, you put it through a burner coin. What's happened? Oh, I don't know, it just disappeared. Well, no. As soon as that happens, they're going to be saying, well, that's money laundering or tax evasion, or, there might be good reasons for doing it, because you've got people tracking your wallet or following you, or security risk, in which case you want to be able to go, yeah, Mr. Taxman went through the burner coin, and here's where it's gone the other side, on my tax return correctly, but away from the public eye. So just using those kind of, the HMRC don't know. The HMRC are slow, but they're not stupid. So it may take a while for them to catch up on some of this, but you can guarantee they'll catch up, they'll backdate it, and then they will come after you. So they're not stupid. My accountant doesn't understand it, fine, but it's your obligation. So when your accountant sends you your personal tax return at the end of the year and he says, oh, by the way, please sign this off, even if he's got it wrong, you're still the one that's liable for doing that. And so you need to make sure that you're logging it, understanding what's going on, and putting it correctly in there as best as you can. And I say that not lightly, because I understand the difficulty we have in logging these transactions. We're not just buying Bitcoin, most of the people in this community, we're rebasing DAOs with hundreds of thousands of transactions. And so I tend to segregate logging with tax compliance. So the logging and the tax compliance side of things is it's what you should be doing. Letter of the law, you should be tracking every small little transaction that you're doing within crypto. Every time you stake it, every time you change between coins, every time you move it, they're all taxable events. Now, the HMRC wants you to log that and want you to put it in your tax return, and there's stuff like Crypto Tax Calculator and Coinly that are all good for that. But we know that by the time a rebasing DAO or the latest DeFi has come onto there and Crypto Tax Calculator allow you to log it, it's moved on and it's something else. And so it's always tracking behind. So what I tend to say with that is look at what your maximum exposure is. What is your, make sure that when you're declaring to the HMRC that you are looking at, right, this is the amount of profit in the maximum capacity or the maximum amount of loss I've made in a period, and get that bit right. If nothing else, the logging and the technical side, we need to try and get right, but that will not get you a penalty. It will just get you a slap on the wrist. So, or the other side, draw a line under it. This is the best information I've got up to this point, and from here on, I'm going to be as diligent as I possibly can, because as the regulations come in, as the spot ETFs hopefully get approved shortly, that regulation is going to come in. So don't give yourself 10 years worth of crap, give yourself 5 years worth of crap and get it right from now onwards. That's going to be my best advice around that. I've made a mistake. So you have your excuses and then you have your mistakes. And again, these are ones which come up quite a lot, and it's not diligent at both ends of the spectrum. So including incorrect expenses. So you've made a profit or a loss, whether it's in your own personal or a company, we'll look at that in a second, but putting costs in against there which you shouldn't do. You've made a big gain or you've made a big loss. You're going to put through, I'm going to put through a family holiday. You're going to open yourself up to an area of exposure to save tax on a couple of grand's worth of holiday that you're putting in there, which will give the HMRC the opportunity to go, this guy's clearly fraudulent, I'm going to look at everything. Don't try and penny pinch and put through expenses that you shouldn't do just for the sake of it. Or make sure you've got a team of people that are looking after you behind the scenes. I think I've heard Siam stand up on here before and go, you can set up a business. Oh, you can put your family holiday through it. I'm sure you've said that once. And then my team see that come through and go, yep, that's going on your personal loan account and we're going to tax you on it. So even if you're making the assumptions, make sure you've got teams behind. Have you said that? Yeah. But people hear certain bits from different people. So just, look at what is a genuine and wholly taxable cost to deduct against it. And similarly, negligent, the other side is not including certain expenses. If you're coming on training courses, if you're, work from home, if you're buying new equipment, make sure you're actually capturing all the costs that you can genuinely capture to bring your tax bill down. I'm all for paying as little tax as you reasonably can at any given point. But make sure you're doing it sensibly. Don't penny pinch and don't mess around with it. Using incorrect tax treatment then falls out of that. So effectively, whether you're paying capital gains tax, personal tax, corporation tax, dividends, we'll cover that on a later slide, but getting that set from the start is fairly key. What you don't want to do is hold your crypto in a personal name and then you make your millions of pounds and actually it would have been more tax efficient to hold it in a business. Or you're holding it in your personal name, makes a load of losses, but your business is making loads of money and you could have used that to offset tax elsewhere. So looking at that kind of holistic approach for people from the start is the best way of looking at your tax setup. Offshore companies. What you will hear, and particularly from the RT community, we hear this all the time. There's you, and you're going to have an offshore company where you're going to move all your crypto to. So Steve Collins over here moves all of his crypto into an offshore company, lends it back to himself as a loan, and pays 0% tax. And that is the way I'm never going to pay tax again on my crypto. And that is a complete scam or sham and will cause you huge problems with the HMRC. So the amount of people that come to me and go, I've got 10 grand now, but it's going to make me 10 million pounds in a couple of years' time. I want an offshore company. No, 99% of the people, it won't work. That certainly won't work. There's some great structures that you can use around offshore companies with specialists that work in that area. I know there's some out here that offer those as services. But really make sure you're clear on what you're doing if you want to go into an offshore setup, because most of the time it's a sham and you're opening yourself up for problems. Again, if you're making 10 million quid and you've got to pay a couple of million in tax, it's a champagne problem to have. Don't cause yourself legal problems. That will get you in jail if you do that wrong, because it's just not worth doing in the incorrect setup. And that's one where I have so many people coming to me from the crypto point of view and saying, I want an offshore company because I'm going to make millions. If someone's telling you you can do that, get a second opinion, because 9 times out of 10, it's just not the way to go. Confusing books and records, again, it's your fault. If you're not logging stuff properly, if you're not doing it correctly, even if your accountant goes, oh yeah, that's fine, we'll put that through on the thing. If it comes back and there's an error, it's your fault. So man up, get it right, or take a risk-based approach. Investing too much is one I see a lot, and it comes back to what Harry was saying. Invest what you can afford to lose, take profits. I'm a big advocate of taking profits as stuff goes along as well, and make your life calmer in terms of where you're looking at for the future. And investing others' money is now very much a key thing, and I see it a couple of times where people say, "Oh, set up a company with a friend. I've got a couple $100,000 off them. I've got my own money. We're managing it together, or I'm looking after it." With the new FCA regulations which are coming through, you're going to get caught. The regulations are moving. Spot ETFs are going to change it as well. So investing others' money, be very, very careful with, because if you fall out with that person, you make a loss, you're exposing yourself personally for some fairly big issues. So, again, just whizzing through this because I'm kind of conscious of trying to get onto the Q&A. The bit that I keep talking about, and this is the area of tax where people don't quite fully understand it. So effectively, in a personal capacity for you guys, if you're hodling Bitcoin, you should be doing it in your own personal name. You've got capital gains tax, and there's a slide in a minute which will show these rates, which is the best way of doing it. So if you're looking just in a personal capacity, you want to be trying to cover yourself under capital gains tax. It's the lowest rate. HMRC, the guidance always tends to lead towards capital gains tax. It wants investors in crypto to be capital gains tax. However, there's effectively what I call the trading trap, which moves it from capital gains tax to income tax. And you don't want that, because then you're talking, if you're higher rate taxpayers, you're paying tax at 40%, 50% marginal rate, and it just causes you, over double the cost of tax. So if you're just buying crypto, you're buying Bitcoin, ETH, any of the main alts, holding them on wallets, trading them a bit throughout the year, easily the best way, personal tax, capital gains tax, happy days. They list what I call the trading trap, which is points that they look at to say, actually, you're now not capital gains tax, you're trading, it's income. And those are degree of activity. So if you're doing multiple trades in any given week or month, you're going to be trading. Organisation, so again, if you're buying some Bitcoin on Coinbase, to a certain extent, you don't need huge levels of organisation to be able to do that. If you're cross-networking, buying random coins on random dexes, there's a level of organisation and sophistication needed to do that, which would indicate that you're trading. Risk, so again, I don't think anything within crypto could be deemed not risky, but they will look at levels. So buying Bitcoin or ETH or something like that, the risk of that going to zero is very, very low. It will fluctuate up and down and have the normal risk levels, but it's significantly less risky than CAS or some of the other lower coins down. So if you're trading in those, the risk is high. There is a good chance, like with Time and Wonderland and Ohm and that, they were multi-billion market cap companies and they overnight went. Risk is high. And then commerciality. Clearly we're doing it to make a profit, but how much are you looking to do that? And if you're trading in and out, you're doing it for commercial reasons. So they're the 4 bits. Any one of those would push you into it, but in most cases for people here, you'll probably find that you sit into all 4. So again, when you're looking at what you're doing, when you're looking at how you're structuring your setup, think, okay, well actually, I've got my low risk Bitcoin that I'm holding. Let's put that over there and log that in a very different way to how I'm logging what I'm doing on my CAS and my random stuff. Because this over here is going to catch me in capital gains, and I want to clearly show that to the tax man to go, right, here's my capital gains, my low tax. And here's my random pot, up and down trading, and I've got that over here. So you can show that you've got the two different tax bits covered. Harry was bragging in the bar last night about how he'd upped his slide game, and they were particularly good. And I had what I've deemed the world's worst slide because I wanted to just quickly show the tax rate. So I'd updated mine. So the best slide of the day competition is now fully on. I wanted to put up personal v corporation tax and talk through it. And no matter which way I tried to structure that, it looked shit. So I leant into it, and we've got the worst slide that we've ever possibly had. And so this is the question I get asked a lot. Firstly, personal tax. Is it capital gains or is it income? And that was kind of what we were talking around on the trading trap. And then, well, do I hold it personally and do I hold it in a company? And as with all these things, the answer is, depends on your circumstances. And I've yet to find anyone in amongst all the people that we talk to that have almost got the identical setup. And it has changed since I talked a while ago. So when I talked a while ago, corporation tax was at 19%, and you've now got this higher rate. So if you're looking at personal tax, I'll whiz through this quickly. So personal tax, as we said, you've got income, which sits with your rates here, 20, 40, 45%. You want to avoid those as much as you can. But if we can, capital gains tax is at 10% for a lower rate, but effectively if we're talking big profits, let's talk 20%, makes it simpler. So as much as we can now, we want to try and put it into this capital gains tax bracket. The annual exemption has come down, so we used to get £12,300 capital gains tax free. That's come down, and it's coming down again further. So we'll only get about £3,000 a year's worth of capital gains zero rate, but the rest is at 20%. Now, the problem with having it in personal is that you can't really control when it gets taxed unless you're really just sitting on it and not touching it. So if you've put your Bitcoin away and you don't touch it for the whole year, you've not crystallized anything, and therefore it's okay. If you've done a few little trades, you will have crystallized those, and they have to go on your tax return regardless. So it's happened in the year, you've crystallized a gain or a loss, and effectively put it on your tax return. So you need to be a bit smart, and you might think, oh, actually, hang on, let me take a bit of let me trade some. There's rules in terms of rolling over and stuff like that, which we won't go into. But effectively, capital gains is where we should be aiming for on holding crypto. In a company, effectively this side here, we then get into what is a slightly more complex setup. And if you're just going to hold Bitcoin or you're just going to do a small amount of trading, by the time you look into the regulations and the requirements and the need for a company, it's not worth looking at. However, if you've got another company and you're looking to invest some of your surplus profits into crypto, keeping it in the company is the best way of doing it. There's no point paying dividends to send it to yourself personally and then trying to bring it back in to buy other properties or anything like that. So effectively, when you've got your crypto within a company, you can control that income and that tax a bit better because you've effectively got your year ends. You can't control the corporation tax, but you can control when you take it out. So you'll pay the corporation tax in the company within the year that it happens, but then you don't have to take it out. You don't have to take dividends, you don't have to take income. You can leave it in the business, you can reinvest it into property, you can reinvest it back into buying other businesses, and basically look to recycle those gains. But from unless you've got those businesses set up already, it is becoming increasingly less beneficial to do that. If you're just looking at doing it yourself, try and keep it outside of that. Another good reason for trying to keep it within a business is if you're making losses, which hopefully now we're getting past that phase, but you want to capture them. If you've got other businesses that are making profit, there's no point losing 50 grand on crypto and making 100 grand on your trading business and paying the tax on that. We want it within the same sort of banner so that we can at least offset it in the short term and get, look after that pain. So personal v company, just as a summary really, used to be kind of almost like on parity. But because of those higher rate corporation tax, it really doesn't make sense. That being said, potential Labour government next year, they might look to change the corporation tax rates. They might probably go higher depending on where they are, but the Conservatives might look to bring them back down again as they try and garner support and stuff like that. So you're governed with the political stuff within there. personal tax actually under a Labour government might be better. So there's the political side to consider as well. Ask the question. Go through that journey yourself. Sit and think, I'm going to lose it all, I'm going to make $1 million. I'm going to hold it, I'm going to trade it. I'm going to look to buy businesses, I'm going to look to buy property. What do you want to do? How do you see that working? How are you going to take profits along the way? Do you need to live off on an annual basis? Do you just want to invest super profits and look to build a pension pot? Only you can answer that, and that will determine how you work. Final slide before we get onto some Q&As. Just wanted to give you an update on a bit of what I'm seeing from the world of business. Because again, it determines how people's lifestyles are at the moment. It determines what you've got in terms of surplus cash, how the wider world is operating. And one of the key things I found over the last 6 to 9 months is the increase in liquidations of small companies. So we went through the pandemic, as we all know, and it was tough coming out of the other side. We had a sort of flurry of liquidations as companies couldn't survive coming out of the other end. And then I think what we had is we had certainly in the SME, small and medium-sized business, a kind of resilience to just kind of charge on and do what we can and push in and try and make the business survive. What I'm now seeing is those businesses that, the directors are struggling to continue to support those. And they're going, we've tried it, we've done. And there's another raft of liquidations of companies coming at a smaller level. And it will just have a knock-on effect. The SMEs lag in terms of the market, but that is where the real world money's being generated. Bounce back loans. If you've got a business and you've taken out bounce back loans and you're in a struggling position around liquidations, bounce back loans are very much a government focus now. So it used to be, well, I remember when COVID hit, there's a bounce back loan, went on the Barclays app, clicked 2 buttons, 50 grand in my bank account. Yay, brilliant. Sees me through. A lot of people did that and then bought themselves a brand new car or took it and put it straight into crypto. A lot of people did that. not really necessarily in here actually, just across the wider, I've got the money, I'll reinvest it. This is one of the things the government are very much targeting. If you're trying to close a business or you're struggling, they are looking at where that bounce back loan went. If it went straight in the bank, straight out, they're coming after you personally. You've got to justify it. If it came in, dripped out on stuff, they're looking at it. And they are targeting what they see as fraudulent uses of bounce back loans. So if you have got a company and you took the money out, put it into crypto, that's fine because you're not struggling. But if you're at, say, a crypto high and you're thinking, I need to look at taking some profits, de-risk yourself. They are going to come after me for that. If I struggle in 12 months' time in my business, let's take out enough and to clear that risk off because they will come after you for that personally as well now. And what I said earlier about HMRC investigations. HMRC are self-funded. They are looking to come after things. Lower level, where we all are, some of the bigger businesses and that they will look at, but effectively they are just looking for easy pickings. And the amount of letters I see at the moment from the banks saying we've passed your details on or questioning where crypto money's gone. And also from HMRC, a lot of more letters coming through saying, we understand that you have invested in crypto, why wasn't it on your tax return? Because Barclays and the banks are all reporting this. Coinbase are reporting it to the HMRC. So even if you're not 100% sure on what you've got, what your crypto liability is, make an educated guess. Write down the reasons for why you've put that on your tax return and put it on there so that you can say, look, I'm not trying to hide it. Here's what it is. If you're going to investigate me, we will then have to look into the detail and try and understand it. But as soon as you try and hide it, they're presuming the worst. IR35 reforms is around, sub-companies, one person working in a company, a bit of legislation called IR35, which has been bubbling around for a while. Not going to go into a lot of detail, but it's one of the things that there's another reform coming potentially in April, provided they don't kick it back, where you've got companies moving around for each other. I purposely didn't write too much for this slide because I wanted to listen to what the conversation was whilst we were doing this. And I've written down a couple of others which I think are quite interesting just from listening to the conversations that have been going on so far. Directors' loan accounts are another one which people are looking at. So if you don't know from a business point of view, you put money into a business, it's a loan account. If you take money out, you either pay yourself a salary, a dividend, or pay your loan account back. Some people then take more out, and then effectively you owe the company back. There's a huge tax penalty for doing that, and so it's not the most efficient way of taking money out of your business, but it's something which the government are also attacking in terms of companies that are struggling. So your company struggles, they're coming after bounce back loans, they're coming after directors' loan accounts, and there was a person and a limited company. There was a piece of legislation a long while ago called Solomon v. Solomon, which showed that the company was a distinct legal entity from the person. It effectively came up with the term the veil of incorporation. So this company is separate from you. What happens in the company is not your fault. What the HMRC are looking to do as much as they can around bounce back loans, around directors' loan accounts, is pierce that veil of incorporation. Because that company in its own hasn't got much cash. But if they can pierce that and say, actually, the director acted in a fraudulent manner or in a manner not benefiting the company to the best it can, we can pierce that and go after them personally. And that's where they're looking. I don't want to scare people in that because there's so many little regulations you can do to cover yourself. Just bear in mind that that's where this is going. And one of the ones, so businesses, a point that I wanted to pick up on, which Sian made earlier about him in the market, likes to be early into the market. That will also happen at the moment in terms of AI and products that you can see coming up. Look at the business side of those, of early market adopters, and see where you can go. But don't be afraid to put your hands up and go, yep, we were too early, and get out of business or anything. Treat them all like trading. Sorry, I'm going to go off on a tangent here, but it was quite an interesting one. A couple of cuddles ago, Siam stood up on the stage and was talking about the world economic crisis. And one of the things he talked about was that the dwindling food supply would be fixed by insect protein. So I was sat out there with you guys and I'm like, hang on, that sounds like an interesting topic. So afterwards, me and Siam were having a beer and it was like, let's start up a cricket protein company. Let's actually look at that. I said to Siam, let's actually go down this rabbit hole. I completely agree. I understand the ideas of it. Let's do that. Let's look at how we can corner the market for protein from insects. So we set up a company with another friend who was also looking at it. And we went down that rabbit hole. We put in some seed funding. And one of the, a bit detailed, but effectively, insect protein is basically grinding up insects for food. And there's effectively black soldier fly larvae. There's mealworm. And there's cricket protein. Now, cricket protein is the holy grail. Then you get up to mealworm and then black soldier fly. And then effectively, they're using this protein for egg-laying chickens. Then you'd look at livestock. Then you'd look at pets. Then you'd look at humans. Now, what Sian was talking about in his thing was effectively looking at crickets into humans. That will fix the supply in the long term. That's where the whole world's going to look at. We went down a massive rabbit hole looking at substrates and cricket protein like levels, how the whole thing works. And at the moment, the economy is all basically on biodiversity, effectively looking at bio-waste and how that feeds in. Sorry, I know we're going off on a tangent, but it's an interesting one. So effectively, the whole community in this business at the moment is stuck in black soldier fly larvae into egg-laying chickens. They can't even put it into livestock yet because they can't control what's going in and they're worried about feeding chickens chicken food. And so for us to get into the position where we wanted to, from a business point of view, we have to move that all the way through this chain and all the way down through that chain. And the industry just wasn't there. It's full of people who want to write papers and get themselves published and pat themselves on the back. And so there's no commerciality there. So we went, okay, we've done that, moved off, shelved it, might look at it again in the future. But we were early. We were too early for that market. And there will be a load of markets emerging at the moment which you can be too early for. But it's good to do that level of research before you jump into stuff. So 5 years. And the scary thing is all the people that are doing this are the eco-warriors that just want to write papers and they're chucking £20 million at them. And basically they burn through that, then they go for another grant, burn through that. No commerciality. It was infuriating. But we went it. It was a little quirk of, oh, let's see how this works. And suddenly we were almost quasi-experts flying out to Finland and meeting people talking about cricket protein and sitting in saunas with Finnish people. So It's a 4 a.m. late night karaoke, which wasn't particularly sharp. So, but there's opportunity. So it's not doom and gloom in the market. I think as we go into the bull market, we're actually in a bit of a depression from a business point of view, which I think will get worse a little bit for the time being. But there's opportunities. And I would look at all those opportunities with those open eyes. Just don't jump straight in. Distressed businesses are distressed for a reason. Have a look at what you can do, work to your strengths. So just a bit of an update from a business point of view. I have an interesting one. If you get me drunk later and ask me about a children's nursery, which I recently sold, I might actually even do a whole talk on that at some point. There's a whole world of litigation and issues going on at the moment. That litigation is just basically the person who can spend the most on legal fees wins. I've trying to sue someone for a nursery I sold, which is an interesting one, which can't really go on YouTube at the moment. So I am going to open up to Q&A, if that's okay.
Cool, right. So just before we do this, Steve said something right at the beginning, which I would like to reiterate, is that during these events, whether it's myself or Steve or any of the guest speakers, during the break times and lunch times, we tend to get swamped, and every now and then someone will come up and then vomit a 15-minute live story, and then a vague question at the end. So if you can, as I said, if you can not do that today, if you do ask him a question, ask him a general question, because there will no doubt be people also waiting to chat. So let's use this, we've got 15 minutes before lunch, let's try and get as many of those questions out as possible. So just pop up your hand, and then Steve, just for the recording, can you repeat the question as well? So Christos, I saw your hand here first.
Okay, so I buy Bitcoin today on Coinbase.
Yep.
2 years from now, it pops 50%. In the meantime, I have moved it to a Trezor wallet, and in 2 years, I move it back to Coinbase, and I convert it into fiat.
Yep.
I have not kept any records. Does Coinbase automatically do the calculation?
So Coinbase, from a tax point of view, Coinbase will notify. I don't think. Are you UK based or?
US.
US, but so it's different regulations. From a UK point of view, which is where my specialism is, you putting money into Coinbase and then buying the Bitcoin will get reported to the HMRC. Moving it to another wallet doesn't create a taxable event. Moving it back into Coinbase wouldn't be a taxable event. And then when you flip it into USDT would be where the tax would crystallize on that. So if you sit on it for 3 years before you do that final stage, you don't actually need to report anything. There's been no taxable event that's happened in that period. You might get a letter from the HMRC saying, oh, we see you spent $5,000 on some Bitcoin, why is it not on your tax return? It's a very quick, easy answer to show them what's happened. Does that make sense?
Yeah, the question is though, let's say you're buying it in different months and different periods and you don't keep track of how much you paid for it. Then when you convert it back to Coinbase, they will automatically know?
No, well, again, you would need to get your records from Coinbase and go, I bought it, crypto tax. If you're doing it that simply, you can just get your reports out and go, I bought at 30 grand, 35, 40, and then when you sold it, work out what your gain is. But you do need to have that. Yeah, definitely.
Also, if you buy stuff on Coinbase, they tell the IRS and HMRC that you have crypto.
Josh?
Hello. A question that will be helpful broadly for people. So let's just take a really easy example. So an individual person, not in a company, has owned, say, one Bitcoin for 4 or 5 years.
Yeah.
They've never declared it to anyone. They've done an odd bit of trading here and there with that coin. They've made a little bit, lost a little bit. They've never declared the losses. They've never declared any gains. So now 5 years later, we want to declare that situation. So a two-part question. So one, what would be the kind of punishment / level for slap on the wrist when HMRC go, you've had it 5 years and you've not told us? How bad does that be? And secondly, if ultimately you know there's tax to come, you know you've kind of in your head put away 20% worth of personal capital gains tax, is the worst case scenario, you just pay your 20%, sorry HMRC, kind of how would that situation play out?
So effectively, how would you get penalised for having not tracked it up to date and then where it sits? At the minute, to a certain degree, we don't know. So that will come through case law. So the HMRC stance will be, you should have tracked it all the way through. You should have declared it all the way through. That was an obligation on you. Again, for the smaller people, they're not going to take them all the way through to court, and so it will come from case law. How I believe it and how we see it from other tax events is, if you've gone, right, okay, so this year where it's now come in and you're looking to cash out, you go, right, I put 10 grand in, it's now worth 50, therefore my maximum gain that anyone could ever accuse me of is 40 grand. I'm going to put that on my tax return, I'm going to be taxed on it. From a tax position point of view, you have complied and you're paying the maximum amount of tax. Then, in terms of them coming after you and go, well, you weren't compliant because you haven't tracked all the logs, there will be a compliance issue. There may be a penalty of some sort, but it will more likely be a, hang on, you know, what can that be applied against? Well, you paid the correct tax, so they can't give you a penalty on the proportion of tax because you've done it correctly. So there'll be a compliance point. I think if you did it multiple times, then they would just keep increasing that, like what they do with VAT. They've just brought in reforms on VAT and put in a whole new penalty. So before you could leave it a bit on the VAT and get away with it. Now, as soon as you don't comply for regular quarters, the penalty ramps up. They'll look to do that on crypto in the long term, I believe. At the moment, it's just purely personal tax. You've not been compliant, you'll get a slap on the wrist of some sort, but have you put the right tax in? And in terms of historical years, they can go back. So they could then go back and go, right, we can now demonstrate multiple years of non-compliance, and that's why we're going to really try and make an example out of you. Chances of them doing that are probably quite slim at the moment. But what I would do is actually make sure that you at least do this year. So you go, okay, I understand that all of this was happening before, but however, you know, it suddenly became on my consciousness that I haven't taken any cash out is not a good excuse, and therefore from this point forward I've been absolutely diligent. So then give yourself that barrier that you can go back to, and then if they want to try and penalise you for before that, at least you can show that you've done it right going forwards. And that goes a long way with the HMRC. Showing that you're trying to be compliant helps. Stupidity isn't an excuse. But there's a difference between negligence and fraudulence. So if you've been negligent in not doing it correctly, you'll get a slap on the wrist. If they believe you've been out and out fraudulent, they will try and make an example. But there'll be case law eventually that tries to sort that.
And then just as a follow-up to that, in that same 5-year example, if in those previous years you did make a loss but it was never declared, and then come to year 5 and you want to be a good boy and put it all through, how far back can the average individual go back in retroactively claiming those losses?
Well, you can, so again, depends where it is in terms of corporation tax, stuff like that. You can carry losses back. You can also resubmit a corporation tax return for the previous 12 months without it getting any challenge. You can go back and resubmit accounts for personal tax returns even further than that if you want to be particularly diligent, but it will open up that investigation. So actually, if you're really clear, I've just done all of the work, I've just spent all this time looking at what I've made in each of the 5 years because I want to capture that loss, which is what I came back to earlier. It's actually negligent almost not recording your losses because there's a risk you could lose them. So, okay, actually I've made a mistake. I've just heard a talk. I now understand that I need to. Let's go back and resubmit the last 5 years' accounts. You'll get an investigation, but hopefully you've got the paperwork that you can just go, yeah, look, sorry, made a mistake, but here's me rectifying it. And that will go a long way as well.
Hi, Owen. Hey. So I hope I'm not going into the realms of being too personal, but like the gentleman at the front there, if you buy crypto and you transfer your money into Coinbase, you send your money out of Coinbase into other exchanges and you buy your crypto and put it on your Trezor. Yeah. Then you decide, I'm going to move to Dubai and give up my whole citizenship here. Mm-hmm. Am I still going to be liable for tax once I sell the crypto if I'm in Dubai?
Yeah, there's a whole world of transition bits there which are very specific and very, I mean, ultimately when you move out, you're effectively liquidating all, if you're going to move to a different country for a massive period of time, just like with anything else, you're effectively upping all of your assets and moving it across to that point of view. So you've bought Bitcoin at 30 grand, perhaps you're moving over there and it's at 35 and you need to look at what your final tax return needs to be before you move into that tax haven. Again, there's an argument of whether they will, how that gets tracked or where. There's sort of rules around amount of days spent out before it happens, so I won't get into the level of detail. But effectively what you want to do is you want to try and clearly show on some sort of tax return that when you left, that was the finite position that then moved, because all of the future gains on that you want to put into your new country wherever you're living. So my suggestion would always be try and put it on there, because even if you think, oh, well, I can probably get away with it. You kind of can, if you ever get challenged, you can go, well, no, look, I declared exactly where I was when I left, and then all of this is somewhere else. Like I say, penny pinching for tax is the bit that gets people caught out. If you've got to pay a bit of tax because you've made a shitload of money, get on with it. You know, it's a nice problem to have. Sometimes chasing the small pennies here and there are what catch you out, and it's not worth it.
Thank you.
Also, bit of hindsight, if you are going to jump ship to another country, it would be even more fortuitous if you had to do that in the middle of a bear market, when you're crystallising everything at a low, and then
Cash it all out into a USDT and just sit there.
2026.
Hi Steve, thanks for that. It strikes me that if you've got crypto for X period of time, you've held it in your personal name, and you want to do CGT, with the trading definition from HMRC, they will want to try and prove that you are actually trading, so they can charge you more tax on income. Is there any sort of guidance or guidelines from HMRC yet of what that definition of argument they wanted to have if you wanted to do CGT?
I've not had any clients claim it, and there's no case law. The crypto tax manuals all really do push to capital gains. I do think they actually really want to push into capital gains, and that's because 99% of, everyone's buying crypto, and they're just mainly doing it on exchanges and stuff like that. So there's a good argument that you can try and lean into that capital gains, but it will be around, if you're getting challenged, can you generally stand up and say, I'm not, commerciality, regularity, risk, it will be challenged. So if you've got a robust, perhaps document why you're doing it, why it doesn't sit within some of those criteria, because you might get challenged in 5 years' time on your tax return. So decisions you're making now, you might not have to answer questions about for another 5 years. So just write it down. I believe this is capital gains tax because it hits this, 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 and this. And, if you've got a separate pot as well, you might go, well, 50 trades in a month is actually my hodl pot because it's not that much, because my risk pot over there are thousands of trades a month because it's in all this really risk stuff. So proportionally for me, that's my risk pot. This is my hodl pot, albeit we're just trend trading, because therefore we're not in and out all the time on a 4-hour chart or something like that, and just document that reason why. So you can genuinely, hand on heart, if challenged, go, this is the reason why we thought it was there.
So it's still open to interpretation?
Absolutely. And they will. They'll keep doing that. HMRC used to do this great thing where you get clearance. You'd go, we think this, this, and this. Can we get approval from you as a clearance document to say that we're right? They won't do that anymore. So you can't actually go and get pre-approval on any tax strategies because they want to come after you in the future and then backdate it 2 years just to really catch you out. So, yeah. Oh. It's like Annika Rice. That shows my age.
Hello. Just going back to your first slide, if you hadn't taken anything out, does that mean you can be taxed on unrealised profit?
Well, technically it's realised, yes, in your case because you're saying it's in crypto, but every time you do something, it's deemed as realised. So the fact that you haven't put it back into fiat isn't the point that it says it's realised. Every time, and there are details for all of it, and there's documents for all of it, every time you transfer between 2 different types of coin, every time you stake, airdrops in terms of NFTs, basically any little movement, and any movement between types of crypto is deemed to be a crystallization of profit. The fact that that isn't into fiat, the HMRC don't care. And I have had someone say that as well. Well, I can't pay the HMRC because it's still all in crypto. I'm like, well, you've got a 20 grand tax bill. Either fund it yourself or cash some crypto out. Well, yeah, but the HMRC won't care because it's in crypto. They don't care. Effectively, you've made gains. It's like if you were making gains from buying properties. The fact that, okay, it perhaps goes into crypto, into fiat in between. If you're just rolling between buying properties, you can't say to the HMRC, well, I haven't actually crystallised any gain yet. They will look at each individual element. There's rollover relief and other bits. But as a principle, every time you do something, other than moving between wallets, you are creating a taxable event, and you have to pay the tax or the loss on each of them. Yeah.
If it's not too difficult to explain, What exactly needs to go on my tax return?
On the tax return, very little, because effectively on the face of the tax return, you're putting your capital gain or your capital loss or your trading income or your trading loss. So you can just put that, and you can, if you've linked up to a crypto tax calculator or a Coinly or whatever, you can just hold that in case you get challenged. The ideal scenario is if you've gone through all of that effort and you've just put the two figures on there, attach the crypto tax calculator report or all 700 pages of it or whatever it might be to the tax return and send it in. So you've done it, here's our tax return, here's all the calculations that make it up. There you go, Mr. Revenue, have a go at that and try and work out what it is. And it will actually, doing that will decrease the risk of a challenge, because you're saying, right, here's the gain or the loss that I'm reporting, here's all the workings, here's the assumptions I've made. They may be wrong when you come to challenge it, but at least here, open and transparent is exactly what I've done to get to that point. Whether you've done it yourself on Excel or whether you've done it in a thing, just attach it to the tax return and show them as much as you can. But they expect you to be able to account for every single little microtransaction.
Steve, have you got any experience with the crypto tax websites?
As in the calculators?
Yeah, and which one is best?
They've all got their own strengths and weaknesses. We have an accountancy license for crypto tax calculator. You probably see it on the bottom of my banners and stuff. And I've used Coinly. The problem is some of them work for certain networks. You know, so when we were doing the rebasing DAOs, mainly on the Avalanche wasn't even on crypto tax calculator at that point. And so they just don't keep up with it. They've all got they'll all pull the information in, but what you'll find yourself doing most of the time is manually going in and trying to log them. It's something where because we looked at it, because we're an accountants and I specialise in crypto, I'm like, that's fine, we'll do all of that for people. And it is the worst job in the world ever. We can't touch it because you don't know. Simon paid a specialist firm once that did a full logging report for him of something, and we tore it up within about 2 seconds. The biggest waste of time you've ever had in your life. So I would suggest, if you're going to get a piece of software, because it will highlight everything, even if not in the right area, and then be diligent from a particular point in time forwards. You know, okay, I'm going to do my tax return up to the end of March 23. I'm going to take a risk-based approach of going, here's my maximum gain. The transactions the HMRC will have to try and challenge me on. And then from there onwards, every week go, right, log in, track what it is. I know in my head what there is, log it, and do it weekly going forwards. So you're in that routine, it's part of your daily life, and then you can attach it to your tax return going forwards. But they're all, you know, they've all got their quirks.
One last comment here.
Hi Steve. It's just a really quick contribution, if I may. From no. I am coming from some tax advisor, right? So the point where a person was saying with regards to HMRC wanting this income to be taxed as trading rather than gains, capital gains. Well, there is a reason why it's not, because there is a case law, and HMRC will always try to push that income to capital gains because, you know, let's say 90% of people lose 90% of their money in 90 days. So I suppose if you were to crystallize that loss, you would be able to offset that against your total income, which, you know, for a higher additional rate taxpayers is, you know, 45%. HMRC don't want that. And if people make a loss in capital gains, you know, not many people are trading assets all the time that they could offset those losses. So this is the reason why it would be, you know, in their interest at the moment this to be pushed towards capital gains rather than income tax. Just from that perspective, but as the market changes, you know, who knows, and the trading is decided by trading badges of trade. You can Google that up and you know, you sort of see where you fit in. Stephen kindly picked up the most important ones that apply to crypto, so that's just a little bit of a contribution.
Yeah, it's effectively sideways loss relief. They don't want you trying to push your income loss onto your PAYE from your business. It's hard to. You can around securities and stuff like that. They're not explicit on crypto yet. I think they'll probably try and rule it out when they try and make it clearer. But yeah, no, completely agree.
Cool. So it's now.
Yeah, so just a quick question about having your crypto dedicated business. I think, Simon, you've mentioned having problems with certain banks, business bank accounts, getting crypto in and out of exchanges. Just wondering if you could comment on whether you could use a dedicated personal account when you're having a crypto business, and whether you need a specific type of account on an exchange, or whether you can use a normal.
So yeah, good question. And it is a problem we have left, right and centre with what we do. So again, it's just around the bank into the business. So just from a general point of view, not linked to crypto, a business doesn't have to have its own dedicated bank account. You can use your own personal account for a business. There's no reason to restrict that. The reason why you don't is, one, it makes it clearer to go, right, that is the business account, that is my personal account. And also, if you get an HMRC investigation, you give them the business account, and if they get your personal account, they start going off on all tangents all over the place. So as much as you can, personal account completely separate from business account. Whether you've got a second personal account, which you just use for crypto, technically you can do it. There's no company law issue with it. But they are all just getting antsy with crypto. You know, Barclays will just close accounts down without anything to do with it. Revolut, personally, you can do crypto. Business, you can't. And then they keep changing back and forwards. You can open. So I just recently opened a. Sorry, yeah, keep going. What are you playing? You can open a Kraken account for businesses really actually quite easily. I opened one last week, so an exchange for a business might be the way to do it. So you've got your business, you have a dedicated Kraken account, which you deem like a bank account, so you trade putting your USDT into there, and then if you're paying out to yourself personally, when you're taking your money out, pay out to your personal account. But it's a minefield at the moment in terms of, so I know the guys at Swissborg quite well. They had a good off-ramp, but you still needed to then go into a bank at some point, but it didn't flag it. I think Swissborg now getting flagged a bit more. So yeah, there's no easy answer to that. But personal is an option. Just be careful with it.